Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold. Gold just kind of continued to ended where it finished on Friday today. And even though it did take a little bit of a dip, we did see prices decline as the dollar firmed early overnight. And then we got to the trade where we're balancing Fed expectations, geopolitical risks. You've got economic risks out there now, and I think that there's a lot of variables up in the air, and gold right now looking to be the safe haven asset class. Certainly it goes hand in hand against equities, which remain, while in a mixed trade today, remain elevated and near all-time highs, and certainly there is some concern that there could be a big move lower. And gold made a nice finish at the end of the day. Now, there is still a lot of uncertainty out there. We got down, close to 1250. That's kind of the new norm, the area we're going to look to see trade, but would look for any excitement, big movements coming out of whether it be earnings, whether it be European election results, whether it be U.S. growth, whether it be something else that we're not even seeing yet. Rising volatility in both equities and treasuries. Those are going to be reasons why gold keeps going up. And I think that right now, 1250 is as good a buying area as any. I think we have unlimited upside, at least over the next 6 months in gold until we start to get some clarity. And how does this work with the gold and the dollar? We've talked about this trade a lot. Dollar goes up, gold goes down. Dollar goes down, gold goes up. And it's also a Fed trade, but I think that those two are starting to separate again. We will see minor points where they do start to trade inversely, but I think they're going to trade more independently. When you look at the dollar, it'll trade more based on Fed policy, more based on U.S. economics, and possibly if you look at some of the uncertainties around the geopolitical risks that are rising in the Middle East and Asia, you could see a dollar bid there as well. Whereas gold is going to be used as more of an insurance policy. It's going to be used as not only to equities, but also to the Fed. It's going to be used as a safe haven asset, which I think will also continue to see gold bid regardless of what the dollar does. And I think if you look ahead to not only this week, but probably next week, gold will be looking at equity earnings. Gold will be looking at what's happening in the Middle East, not only in Syria, but now in Libya and Iran. And if you look over at North Korea, the tensions that are rising, that will keep gold bid. And volatility in pretty much all asset classes is on the rise here. And when that happens, that fear creeps into the market, and that tends to bring buyers in. It is short-lived bids usually. However, what I'm looking at now, from a macro perspective, it doesn't seem to be short-lived events. So we're going to be keeping our eye on gold, still hovering somewhere around 1250 as a buy. I do expect it to extend back up to those highs we saw from Friday up near 1270, slowly but surely, especially if we get some non-conforming news over the next week and a half. And then, of course, you have the European elections at the end of April with U.S. first quarter growth, which will be the big numbers and the big events that really move gold if things don't fall into line. This has been Todd Colvin coming to you from the floor of the CME Group.